2:02 Eastern Time, and I'm Steve Cavanaugh, and I'll be leading our webcast today, and glad to have everyone on the call. Assisting me today is Drew Blackwell, Program Manager. We've got the slide deck up for you guys to see. We will actually have all of the lines muted through the course of the webcast, and then we'll do a little Q&A. And Drew, I'm going to actually pass to you for just a second and have you talk through the chat box and questions that we can go ahead and get coming in. And then from there, I'll have this turn it over to Matt, who will actually do a kickoff, and then we'll get started. So if you can talk through the logistics for us, Drew.
Absolutely. Everyone, welcome to the call this afternoon. Thanks for being here. If you do have any questions, we're going to have a Q&A session at the end, but if you want to go ahead and send some questions in during the content as you're hearing it, feel free to use the chat box, and we'll restate those questions at the end of the presentation.
Very good. And Matt, if you could go ahead and get us kicked off, and then we'll work through our presentation today.
Thanks, Steve. Thanks, Drew. I want to thank you guys for being willing and able to educate us on non-revenue water here on a dreary Friday afternoon, and look forward to your insights. Both of you are experts in this notion of non-revenue water. I know, Steve, you were involved on the Water Loss Control Committee for AWWA. You cross the country and educate people about this issue, which is rising in prominence, if I understand correctly. And as water utilities try and figure out what is non-revenue water versus unaccounted for water versus water loss, and is this something I have to do, or would it be nice to do, and what does it mean to me, and where do I put my first dollar when I try and reduce my non-revenue water? Those are questions that a lot of people have, including many of us on the phone. And so we look forward to hearing from you and Drew on kind of setting the table on some of these basic issues of what we need to consider and think about as we go forward and try and improve our operations and financial performance. So thank you for being with us today. And I should point out, Steve, I think you're recording the audio and video for all of us, so we can push this out to other people who may have an interest in this topic. Is that fair? Exactly.
And again, thank you for the intro there, and we will kick off a bit. Greetings from the Water Loss Control Committee of AWWA, and specifically I chair outreach for the Water Loss Control Committee, and this is a very big issue, and it's not just municipal utilities. It is indeed investor-owned utilities, and I may have actually had a chance to speak to some of you at a recent Association of Water Companies conference, and I will be at NARUC next week in case any of you want to have a quick chat as well. But let's go ahead and get started. Really talking through the drivers of why is this really taking hold across the nation. Obviously, there are environmental drivers of drought that actually are critical of really putting this in the forefront and attention of real scarcity of supply that's out there. We have in some states, I just pulled this one, I was just in Utah at the Intermountain section there, and the driest record on year, and I know some of on our call are from the Southwest today, so you certainly have experienced this. It's a challenge, it's a driver of why utilities are really getting their hands around the source. There's obviously a public relations side. This has an extra special twist as it relates to investor-owned utilities, and that is that in rate cases and how you're looked at in terms of the public, many times public staff is looking at the way your operations are being managed, efficiencies, and I'm going to kind of hit around all of that today of some of the current guidelines that are out there that are really, quite honestly, not that helpful. But the public is very interested in how we are managing non-revenue water. Another slide there of this, the words that really catch the attention, billions lost, number of swimming pools that are leaking. Why can't you just go fix the leaks? A lot of these things that are sort of the emotional drivers out there on the public side. One of the kind of the newest developments I would say that's happened that's really driving this issue of paying attention to non-revenue water and really reducing those losses to economic levels the bond rating agencies, now to include Fitch as well, but Moody's, Standard & Poor's, of actually looking at how a utility is managing their non-revenue water in either a general report, still based on a percent of unaccounted for water or percent of system input volume in the vulnerable category, up to a strong, which has been doing water auditing on an ongoing basis and letting that really drive their behaviors for reduction of losses in the system. And actually, we have some pretty powerful success stories in the past month, actually, where bond ratings have been increased. That has been a substantial reduction in debt service on new issuance. There's some interesting developments there that are happening. We have a very real supply issue, and this is one that is it's a public utility, but there are a number of case studies out there in the private investor owned as well. This is the city of Asheville, North Carolina, the self-proclaimed beer capital of the world, where they've actually had, over the past 10 years, it's hard to read the bottom of that slide, from January of 2007 to September of 17, maintained the actual supply volume while increasing authorized consumption. That's been handled through a direct reduction in water loss. So that's pretty powerful, and that is indeed the one that had the bond rating increased as well. That has meant increase in revenues, both in the dollars that are being recovered, total avoided cost, about $3 million for this particular utility, and then also in terms of the actual reduction of leakage in the system from about 7 million gallons down to 4 million gallons a day. So some pretty substantial reductions there. I like this title of Changing Hysterical Reporting, and this is very much, I don't know if we've got anybody from Kentucky, but I was just there yesterday with the PSC. We have a number of public service commissions, rate-making bodies that have on the books these triggers of arbitrary percentages, 15% unaccounted for water, 15% water loss, and a trigger that means you must do something if you don't meet that standard. Well, this is, as I'll show throughout the course of the presentation, very problematic, and this is one of the primary things that the outreach committee of AWWA is doing, is trying to really pivot this towards what we should be measuring, which is the volume of loss and the value, and then looking at it in terms of what is a utility's economic level of intervention that makes sense. Because an arbitrary percentage that is just, quite honestly, not reliable in any means is problematic. And this is a couple of those states, at least, and the PSCs that have some of those triggers that are out there. The regulatory landscape is changing quickly. This map is turning a color of green, and that is as on the primacy side, this is more on the Department of Health, the Division of Waters across the nation, as they are really starting to see the problems associated with water supply reporting in this percent manner. They have started to implement this methodology that we'll be talking about today, which is the M36 methodology of managing that use and loss in a way that is economical. And so states of Georgia, California, Hawaii require audits on public utilities on an annual basis for all that serve greater than 3,300 with a level 1 validation. And I'll talk about that in a bit, but that means it's not just numbers that you are always repeating and reporting, but these are where you're getting a higher level of scrutiny, looking at those supply numbers by meter, by month, and not just one single number of an annual basis. But the regulatory landscape is changing very, very quickly as the primacy agencies are moving forward. I was just at the State Drinking Water Administrators Conference, and a large number of states are moving either in study groups, pilots, to start to point those concerns out, because they're concerned about the monies that they're lending out for improvements. It's really not solving the problem. So this is why the regulatory landscape is changing. So what are we tracking? How are we tracking it? And just sort of following along in this graph, this may feel familiar as I sort of build this up, but at million gallons on the left, you've got the percent loss as a percent of system input volume. on the right. And so in looking at how we're tracking, the first thing is, what are we tracking? We're tracking unaccounted for water. Well, I mean, it's actually, I've been looking at it, and it's actually water loss, because I know about that flush water. I know about that other aspects of what we need to run our utility. So it's percent of water loss, right? Well, I mean, it's actually leakage. That's the water that never reaches a customer, and it leaks out before we get there. So that's new supply. If we capture that, we could sell that. So that's what we need to be tracking. Well, no, I've been to a seminar or a workshop. I know that it's non-revenue water, and in fact, the challenge is what are we tracking? And of course, of a business, and this is why I really enjoy speaking to investor-owned utilities, is you're running your utilities like a business. It is really leaning into the economics of this. And so the course of what we'll be talking about over the next few minutes will really lean into this particular issue. So follow along with me if you can, and see what happens here when we're tracking percent of system input volume. So the blue bars, of course, are the supply, how much we're putting into our distribution system. The green is the billing. So this is our billed authorized consumption. Our water loss is that red component that's there. And then that loss over our volume of water supplied into the system, generating that percent, which is typically how utilities are indeed tracking this. So we're moving along, we're tracking, and so we start off and we're doing okay. Maybe it's around 10, 12%. So the normal way that we've been looking at this, it's okay. Well, it's starting to creep up, and maybe I'm on a fiscal year of July 1st to June 30th. Maybe I've got a rate case that's coming up in July or something like that. So something's happening here. I need to get my hands around it. Whoa, something is really happening now. We're in October, November. Now we're starting to work on some budgets. We're thinking about things. It was okay. It was just an anomaly. Everything's fine. So we're continuing to, maybe pull off of the site on that. And then if we creep up, and then we get to this oh crap moment where we're sitting here, and based on percentage, we're up around 30%. And if we're measuring and monitoring our use and loss this way, and our quote unaccounted for water or percent water loss, this is a challenge. But if you really think about this, look what's happened on water loss. Nothing has changed. The only thing that's changed is, and this is a great example of a very real case, and this is a real utility that we're looking at here, is that we've actually reduced the supply. We've been going through the winter months. We're out of irrigation. We actually, that loss as a percent of system input volume is quite a bit higher on a percentage basis. This is a challenge, and then what happens in many cases is utilities will jump straight to an intervention strategy. And in that jump to that intervention strategy, sometimes we say, well, I got to go find my leaks. And we embark upon this, massive leak detection system. We hire consultants, we buy equipment, we're out there trying to get this done. Or the other side, I know I've got, poor meters, get those meters replaced. And so we're jumping, or we replace assets, which is another thing that we see quite a bit, is we're digging up assets that are not at the end of their useful life. So these are some things that we do when we jump from percentage actually to the actual intervention strategy, which is a challenge. I like to say it's the right tool on the wrong problem. This is my thumb, and so this could be pretty damaging if you apply that right tool on the wrong problem out there. What AWWA is really promoting, and what we really are hoping every time we have a chance to talk to the National Association of Water Companies, we get a chance to talk to PUCs, the public staff, and we literally are every week out there having these conversations, is really managing our use and loss in terms of the volume, the value, and the validity of our information. As we're first starting into this and we're first starting to perform audits, our reliability of our source data as we're bringing it in, it may be fairly coarse, because it may be the number that we've always used, but we've never really delved in and looked at it by meter, by month, as an example, from when I was speaking a little earlier on that. So the lens that we look through the results of the audit and that process that we'll be going through is through the lens of validity, but again, basing it on the volume and value. On the right, you'll see the free water audit software. Drew's going to hit that in just a bit. That is the place, if you will, that we're gathering the data for the audit, this M36 audit that's out there. And the unique aspect about this methodology is it is indeed looking at it in terms of volumes and values, but we're looking at it of really the data validity grades for each input. How confident are we in our volume of water supply? As an example, if we have no metering, then that would get a very low data grade, a 1 or a 2, because it's an estimate, versus if we have testing of that meter twice a year, both volumetric testing and calibration, and that would receive a data grade of a 6, 7, or 8 based on what the results of that testing would be. So that's a very important aspect when we look at how we are tracking that data. This one should resonate with everybody on the call today, and this is really understanding where we are at our economic optimum. And this is the business case. This is, again, why I really enjoy the conversation with investor-owned utilities. If you look on the right-hand side of this graph, where you are doing only reactive intervention, you know, you're fixing leaks that surface, you're replacing the meters only when they stop. Well, your actual cost of the water and revenue loss could be very high, because you know this revenue loss through metering or through leakage that was just going on before we finally had a rupture or pipe burst, it could be high. Well, you've got a low cost of intervention, but you see it's still costing your utility. Conversely, on the left-hand side, if you're overspending, replacing pipes too early, metered before their useful life, you've got a very high cost of intervention, and the value that you'd be recovering could be very low. And so this is an important piece to really find that economic optimum. And from a business case, and this is what we really are talking about, and weaving into your rate cases, of where you've got a rock solid plan of action of how you're managing your utility, defining this economic optimum and the resources you're putting forward. That's what we need to be looking for. And of course, that's new revenue, and it's also new supply that's out there. So the M36 manual is about 450 some pages. It's about 2 inches thick. It is a fantastic document. It's the backbone of everything we're talking about. What I would like to say is the methodology fits on one page. And I want to just take just a moment and walk through this. And I want to say the box on the far right ought to look familiar to you, because it was the next thing that popped in on that slide after the oh crap. And that was that, you know, we go right to the intervention. On the far left, that's not even on this chart, is percent of system input volume. And most of the time, we haven't even gone through and performed an audit. We've not broken down our losses by apparent and real, and we've not really delved into the accuracy of that information, which is indeed that first stage, that baseline that's there. So when we jump from the percent all the way to the intervention, that can be pretty expensive. It also can erode customer trust as you're out there replacing lines and doing things. And it really is not moving the needle in terms of reduction of leakage or reduction of metering type error or apparent loss. The second thing is once we get to that baseline, we then need to have that as a business practice where we're actually looking at it in terms of what's the technical analysis. Let's break down our real loss into how much of it is finding us or reported breaks that we are going and responding to that are called into us. How much of it is the background leakage, which is that water that technically, unless we change pressure, unless we change the actual asset itself, we're not going to be able to find it through traditional leak detection means and methods. And then how much is out there, what we call hidden leakage or unreported, that is just leaking on and on and on. We could find it if we had an intervention strategy. The same on our apparent losses, and Drew's going to further define those in a moment, but that's theft, metering accuracy, and data handling. In each of those components, making sure we've got the right tools and we're working on the right economic target, which is that third stage, which is that economic analysis. What are the cost of losses? What are the costs of intervention? And how do we develop a program, not just a one-shot deal? And as engineers and utility folks, we are looking for, give us the method, give us the solution. Well, it's not just plug the numbers into the software equals the solution out. It actually is looking at what's the cost of intervention, how does that relate? And then, of course, the implementation of the solution, finding the right tool on the right project, the right job at the right level, that's that intervention strategy. So this is the slide that I really like to spend the most time on, because it makes great sense. Utility leadership gets it, understands it from a perspective of how to really address those losses. And just one more before I buck it over to Drew, and that is that, quite honestly, this is on fire across the nation. These are the states that are looking at pilots and full-scale training and technical assistance. And like I said, we're in just about every association conference as one of the lead topics. There's the third North American Water Loss Conference that'll be in Nashville, Tennessee, next December. A full conference with just on water loss control technologies and strategies. So with that, Drew, I'd like to have you take us through the backbone of the balance and through the software, if you can. Can you take control back, Drew? You need me to give that back to you.
I've got it here, Steve.
All right, fire away.
All right. Thank you, Steve. And thanks for giving us the why we should be looking at non-revenue water and addressing our water losses. And now we're going to look a little bit into how we're doing that. So in this section, we want to look at the foundation of water auditing, which is the water balance, and the tool in which it's created. And that's the AWWA free water audit software. And along the way, we want to try and answer some of the questions that might be on your mind, such as what is non-revenue water? How is it different from unaccounted for water or water loss? And why should I perform a water audit? So let's start with the water balance. When you're preparing a water audit, you are essentially building your water balance. And it's the first stage in that M36 big picture graphic that Steve showed us just a moment ago. And I want to take just a few moments to cover that water balance. The water balance is a mass balance, and it accounts for all volumes of water entering our distribution system. It's a summary of key water audit data that shows water management from source to customer, with the sum of all of the quantities in these columns being equal. So we'll build out this water balance here, starting from the left, and by identifying the sources and quantifying the total volume that is supplied to our distribution system. And in doing that, we have the opportunity to correct for any known errors that may trace to our supply meters, for example. The volumes of water that we consider here are whether it's our own sources, imported purchased water, or exported to a neighboring agency, are all treated sources. And once that total volume is known, the water balance moves to authorized consumption.
Hey, Drew.
Yes? Sorry, having a bit of trouble hearing you there. Would just recommend maybe using the chat box. Didn't quite get the audio there. We'll continue on here with the water balance though. And just a quick check. Looks like some of you may be having trouble here seeing my screen.
Drew, I've got it just fine on my end on share screen.
Okay, and for those of you on the call, we are building this water balance. So right now it probably looks like an incomplete chart, and we are building onto this. So a little bit of animation going on here with this particular slide. So continuing on with our authorized consumption. This is the volume of water taken by registered customers. The water supplier and others who are implicitly or explicitly authorized to do so by the water supplier for residential, commercial, industrial, or agricultural purposes. Authorized consumption includes water consumed in such activities like firefighting and training, flushing of mains and sewers, street cleaning, watering of municipal gardens, fountains, and construction water, and the list goes on and on. Our authorized consumption can further be broken down into subcategories. So it can be either billed or not billed, and metered or not metered. In the billed consumption, typically the largest volume is going to be in our water balance is the billed metered consumption. So this is your customer base that you're generating revenue such as domestic and commercial, industrial, and institutional classes. The billed unmetered consumption is the part of the billed authorized consumption volumes that are calculated based on estimates or norms from water usage sites that have been determined by utility policy to be left unmetered. So any flat rate customers you may have would fall under this bucket. The unbilled authorized consumption that we see here is unbilled but still authorized by the water utility. And this includes unbilled metered consumption and unbilled unmetered consumption. The unbilled metered consumption is authorized by the water utility, but for any reason is deemed by utility policy to be unbilled. So examples might include metered water consumed by the utility itself in treatment or distribution operations, or metered water provided for municipal purposes and civic institutions. The unbilled unmetered consumption is still authorized consumption, but it's not billed or metered. And this component typically includes uses such as firefighting, flushing, street sweeping, fire flow tests conducted by the water utility, etc. Our billed authorized consumption can be referred to as our revenue water. Through this mass balance approach, with each column of this water balance totaling the same volume, we are quantifying our water losses and non-revenue water through known measured volumes, estimated volumes, and also through a process of elimination. Our water losses, quite simply, are the difference between the water supplied volume and authorized consumption. But we can't stop there. Our water losses are further divided into apparent losses and real losses. Now, this is the fundamental difference between the term unaccounted for water that was abandoned by AWWA. So we are quantifying our water losses by taking the difference of our water supplied and authorized consumption, and then further disaggregating our water losses into these two different types of losses. Our non-revenue water is made up of those components of the system input volume that are billed and produce no revenue. So non-revenue water equals our unbilled authorized consumption, apparent losses, and real losses. The sum of these three is what we are calling our non-revenue water. And we can dissect that a little bit further. We've already discussed some examples of our unbilled authorized consumption, and it's important to note that even though policy may permit these types of usage, there's still a value that's associated with these volumes. One of the tools for controlling the unbilled authorized consumption may be efficient flushing practices and awareness campaigns, but also tracking these through estimation methods. Our apparent losses are losses in customer consumption attributed to inaccuracies associated with customer metering, systematic data handling errors, and unauthorized consumption or theft. Our apparent losses represent those non-physical, sometimes referred to as paper losses, that result in uncaptured revenue for the water utility and distortion of customer consumption data. Some of those tools for control include data management, quality control practices, and meter testing and repair practices. Our real losses are the physical water losses from the pressurized system and the utility storage tanks up to the point of customer consumption, which is the customer meter in those utilities that meter their customers. Our real losses include leakage from mains and service connections. That's typically the largest component of volume for most systems, and storage tank overflows. Some of the tools for control of real losses may include leakage and pressure management. A note that with these different types of losses, they're also valued at different rates, with our apparent losses being valued at the retail rate and our real losses being valued at the wholesale rate. And said another way, the cost to produce one additional unit of water is how we're valuing those real losses. Now, the tool used to create the water balance is the AWWA free water audit software. This software, as the name suggests, is freely available. It is the industry standard for water auditing, and it's also in an Excel format. So although it does say a water audit software, it says indeed an Excel spreadsheet with a lot of good tools under the hood. So it's a familiar tool that we're all used to using. And what you see here in front of you is the reporting worksheet of the software. The water audit is conducted for an annual time frame, either calendar or fiscal year. And as far as the inputs into the tool, there's not that many. Only about 10 to 13 inputs are typically, volumetric inputs are typically used for utilities. And there's a handful of system and cost inputs as well. So not too many inputs to complete on this reporting worksheet. There's also some default values that are provided here, some default options for some of those volumes that are difficult to quantify. And those might be unbilled, unmetered usage if we're not tracking our unbilled, unmetered usage through some type of estimation. There's a default option for that. Another example would be theft. That can often be difficult to quantify, so there are some default options to help us estimate what that volume may be in our system. These are just some snapshots of some of the performance indicators within the software. This is the output data. So think back to those 3 V's that Steve mentioned earlier, the volume, value, and validity. That's the lens that we want to look at our performance indicators through. So some of the information we see here would be the overall data validity score. We see that up in the top of the screen here in red. In other words, how reliable is my data? And this data validity score is based on practices and policies that are unique to each of those input values in the water audit software. And it gives us some direction as to what types of next steps we might want to consider. We can see the volume of our losses annually, both apparent and real losses. And we can also start to see how much those are costing us. We can also see our non-revenue water as a percent of cost of operating our water system. And additional performance indicators that we can look at in terms of per service connection per day, and we can also start to gauge the leakage in our system. So performing the water audit annually is really the only way to truly track our water losses and non-revenue water and compare our progress year over year in order to make those informed, cost-effective decisions. This is a top-down approach. I'm now going to pass over the controls back to Steve. He's going to talk a little bit about that bottom-up approach and some advanced validation techniques that can be considered.
Thank you, Drew. And let me grab the screen back and get us going here. All right, quick check, Drew. Everything looked good on your end on the pass?
Looks great, Steve.
Great. Thank you. Good overview. And that's one of the key pieces. I appreciate you spending the time to define each of those categories. We like to say that there's just a few of the inputs. It is simpler than your taxes that you fill out each year. The challenge is, of course, really digging into that data, the sources of that data. The one thing I'd really like to do is to drive home one key point, and that is that the top-down water balance gives you a single number for real loss or leakage as a resultant piece. What we really need to do is recognize that all leakage is not the same. And I mentioned this briefly before, but I'll hit it now with a graphic to really drive that point home. And that is, there is a companion tool, leakage component analysis, another free tool that allows you to take information that you are gathering in the utility on the types of leaks that you have in the system, an estimate of the volume of leakage when you do go and make that repair. Is it a main break, service break? What's your response time? How long was it open? Some of that information can help to understand your practices on an annual basis to really start to identify how much of that is reported leakage. Again, that water that finds you. Likewise, based on the physics of your system, the miles of main, the number of active and inactive service connections, and your system operating pressure, that is used to actually calculate your theoretical minimum or your background leakage. And as I said before, that's only addressed through non-acoustic leak detection means. It's through pressure management, reducing that pressure, and asset rehabilitation. But what we're really trying to understand of what makes economic sense for us to go and target is how do we shorten the response time, which is getting to our reported leakage faster, meaning shortening the runtime. That's where work order management systems, that's where we see the ability to implement valve exercising and valve location programs where you can isolate, shut off that water. But that middle piece, that unreported leakage, really understanding the depth and breadth of that to understand the financial impact and the volume that we're pursuing. So in this next step of taking from that top down is now working bottom up to use some of the data that you're gathering in the field with reported leakage, some of the physics of your system to get your background leakage to then understand the unreported leakage that's out there. Drew mentioned where there can be errors in the water balance. Some of you may have setups that look very similar. You'll see the check valve identified there. You'll see the turbine meter that's in place. So the utility was concerned about this from an accuracy standpoint. They knew that they should be doing some accuracy testing of that meter. So they took it off and sent it to the bench and had it bench tested. It tested at 99.5%. Many of you probably have already perceived what's happening by the diagram on the bottom. But based on the change of that flow profile for that disturbance of that check valve upstream, this actually was recording in situ at 142%. And so you can imagine with that first number that Drew talked through, of the volume supplied, if you're showing 142% of actual coming in, that's a big challenge. And there's where we've got back to that saw in the apple in my thumb, where it could be a very big problem because you're sensing that meter is installed accurately. So in situ, and we see this over and over throughout the United States. This is data from Georgia. You've got on the left a SCADA report with as measured and as recorded. You'll see that there was a period of time where there was zeroing out of the meter, very common. And this is where you start to look at the sources of your data moving away from that one number, and you're starting to really look at it by meter, by month, and as much granularity as you can to catch those errors. Many of you may have well systems, and this is a real well system in Georgia, and you can see that challenges with Georgia meters. 49% failed, only 33% were untestable, only 18% passed. This is in the statewide training program that was executed in Georgia. So our source meters are a big area where there can be concerns. In Washington State, there was some advanced analytics done on billed metered consumption. This may be a little hard to read, but think of it as the meter location number, and then looking at it again by meter. This is the residential meter of seeing where we've got actual gaps in flow, where we've got negative consumption, where we're seeing stopped meters. These are very common when you start to look at your data sets a little deeper in the diagnostics and finding some of these challenges. But when you're looking at Rick from Billings, one number that he sends over each month or each year of how much billed meter consumption, you're not going to catch these types of errors out there. So as I'm rounding out, I want to put a couple quick things back into your world on the investor-owned utility side. And these are, this is a utility that was having to, quote, report of how they were going to reduce their water loss control or their water loss under 15%. And a couple of things highlighted. Investor-owned utilities who understand these business practices but still have to meet these arbitrary percentage because it's a rule. And we realize it's a rule, and we realize that we've got time until it's really trued up. They're pushing back and saying, look, here is the best practice. And they physically mentioned the AWWA methodology in their response. And they also said, if you see the bottom there, we cannot provide a schedule for reducing system, quote, unaccounted for water to 15%, because leaks are dynamic and varied. Controlling water loss is a continuous process. And then they talk through their economic strategy of putting in at the right economic level how they are looking for those hidden leaks that are out there. So we're seeing utilities really lean forward and take back to the PSCs, a very, very strong response. But absent that, folks are really more geared on how we're going to get our rates approved and just sort of making the numbers work. I'm being blunt. In a lot of cases, that's what's happening out there. But when you've got a defensible plan, it actually can take you further by working a total program for your utility. So in looking at a couple things here, what we've got is just a couple of case studies. I'll show just, again, the volume, the value, and the validity score that were there, and some recommendations of going through this, with improving the customer metering, estimating of the supply meters, and then the authorized build consumption. And then on our couple more of the case studies, and I realize folks are ready to get into some Q&A, so I'll just show these quickly to really land on this strategy for the long term and your total programmatic approach. So again, establish the balance, move forward on the technical analysis, do the cost to benefit analysis, and then interact with a proper intervention. So purposely kicked up, Drew had sent me a note, said get on it with it. They're ready for Q&A, so let's hit it. So Drew, lead us through the Q&A, and we'll get at it.
All right, Steve. Everyone, I have unmuted everyone's line, so this is always an interesting time of these webinars. But we did have some questions come in through the chat box. We'll start there, and then as you guys have any questions, we'll just ask you to chime in. But Steve, if you could, if you won't mind popping back to the slide where we were looking at supply meter testing and how different configurations may present a challenge to some of those tests, and what makes these testable is one question that we have.
Great. Let's hit those, and I'll try to move this quickly and keep the questions coming as we move. So the one thing is it's in situ. That is the number one thing. And so if in this case you could not get a reasonable test site based on this setup, utilities are going outside of the pump house. They're actually going in many cases they'll find a section of line prior to the first customer. They're actually digging down, getting to a test port. We also are seeing, based on the types of tests, some transient time tests or strap-on type metering. So pitot test, we're actually getting a sample port and doing a pitot test. So a number of tests that are out there, but the flow conditions need to be appropriate and needs to be conditioned flow where you're actually taking that test. So you've got to find that spot. Many utilities are also doing tank drawdowns. So if you've got a clear well that's close by, you've got a known quantity of water you can put through that meter. That's also another way that you can test it, but you have to check it in situ, and this is a great example. Next question,
Excellent.
Drew.
Thank you, Steve. All right. Anyone else on the line have any specific questions they'd like to address? We should have all lines unmuted at this point, unless you are self-muted. Okay, give it another minute or so to see if there are any other questions.
Drew, this is Matt. I'm really interested again in the notion of economic level of leakage or economic level of intervention. I mean, effectively, what I think you're saying is it may be you may have a high water loss, and yet from the economics of it, it may not be appropriate to intervene and reduce that at a certain level. I don't know if you want to. I'll throw myself under the bus, and if you want to talk about sugar. Or Sapphire Valley, I should say, Steve, you can do that as an example.
Sure. Well, the first thing is we have to understand the yardstick. So the first thing is if we are still measuring this in a percentage, that's not an effective measure at all. Hopefully I've made the case for that of how that can be all over the board. So a percent of system input volume is not a metric. So when we look at it in terms of volume, we've got to quantify that. And in the case of the system you're describing, yes, there was a high volume, but you were an abundant supply. So your cost of production of that water was very low. And so, and you can recall the numbers exactly, Matt, and share those back if you'd like. But, when you're looking at, we use an example, call it $25,000 a year of real loss value, because we value it at the production cost. Versus an intervention strategy that's $150,000, that doesn't make business sense. And so, but being able to show that to a public staff, you've got to have a plan. You have to have a program that is showing how you've gone through and you've developed what your intervention is. And back to that chart that I was showing, Matt, of the types of leakage. This particular chart here, if I'm still sharing the screen. If you've pulled away your reported leakage and based on the records how much that was, and you've calculated your background leakage, and let's just say you had 100 million gallons a year of leakage, but 30 million gallons you could account for from the records and your reported leakage, and 40 million gallons were background leakage, so that's 70. So you really only have an economic bogey to even go after of that 30 million that's remaining for unreported leakage in the middle. That's where you're basing your economics. So in this case, it may have been 25,000 of value of that unreported leakage. If you were able to recapture that, it has a value to you of 25, but to get it, maybe $150,000 annually. So hopefully that answers it. And you may be able to put a finer point based on specific numbers there.
Is Sarah Bond? This is Lisa. Are you on? Was Sarah Bond on this call? I can't remember if he was going to be. I know he's up to his ears in budget stuff. It just
I
makes me
believe he
wonder,
was on
Matt.
earlier. He did drop off though.
Yeah, Matt, this is making me think about some of the conversations we've had with BC, and on one hand, it's very easy to say people, we should not be using percent as any kind of a metric, but the reality is that it is by lots of people. It's the question about what you're benchmarking that to that's got to change the conversation. And so I'm just thinking about whether, what kind of steps we want to take with BCI to change the conversation from them, because right now it is being reported on a percentage basis, which could be fine if you kind of come back into this warped version of a percent target, but probably what they're more interested in knowing is the actual dollar amount.
Yeah, you bring a great point. It is the conversation I have every day. You've got to have your baseline to show where your volume and your value is, and then you're working off of that. And that's why I'm showing Mohawk Valley here. I think they're doing a great job of really pushing back to the Public Service Commission. But you've got to have a program. You can't say, well, that's not a good metric, therefore we're not going to use percent, because you have nothing to defend that. You've got to have a water balance. You have to have a program in place. You have to have done the economics. Ohio PUC is one specific one that I have been helping them understand this economic level of intervention. So hopefully that helps. But you make a great point. Absent anything else, absent volume and value and something defensible, we will continue to gravitate back to the simple, neat but incorrect number, and it is absolutely that.
Well, and actually, I'm going to go on and ask then even about the quote unquote program. If you know your economic level of intervention is like way far off of where you're at, you want to have a program to minimize, but, I'm thinking of, like Steve Lupertozzi's version of what you just talked about is out in Galena, and, they've got, huge numbers out there. And, there's, they kind of monitor to see if it's changing, but it's like there's not kind of quote unquote quite a program because there's just not much you're going to do about it right now. It's just not even remotely close to a level where you're going to do a lot, and it's all in rock.
Right, but I would offer that you really are doing a program. If you're monitoring, and then and at this level you're doing this rinse and repeat approach back here, where we're constantly looking at it. Are we operating at an economic target? And that's exactly the methodology is saying.
I tend to think of my programs as a little bit more active, but yeah, I agree.
Sure.
Yeah, hey, Lisa, Steve, I joined really late to the call. And yeah, we do have a little bit of a program out there in Galena where we're constantly finding. We actually just found one this week that was a massive leak, but you're right, it's all rock and it's hard to find. And my question, though, is when we talk about economic level intervention, and I missed it, so I apologize if I already talked about it, but how does that come into play when a regulator says, for the system that Lisa was talking about, they allow us, I think it's a 20 or 25% level of unaccounted for water, and all the expenses related to that are allowed to be recovered in rates. And I think it used to be 50, and in the current rate case, the commission brought it down a little bit. How does that then play into the economic level of intervention if you're recovering it through customers' rates?
Yep, it's a great question, and again, it is the conversation we're having at the utilities commissions every day. Tennessee PUC, and having this right now. And the fact is, they realize how flawed this is. They realize that that's a challenge. The answer is, I think you're still going to, like in Wisconsin as an example, they still calculate both. So they're doing the program, and the utilities are really starting to lean into this. But they also, and it's being changed now, but they also are reporting and doing a comparison to that. So the answer is, until it changes, the law changes, you're going to have to at least calculate the number. But that's why we're showing you this train has left the station. I mean, this is the way that it's going to be in terms of PSCs, utilities commissions, primacy agencies, and looking at water use and loss. But for right now, I look at it from how do we want to run the business, and you may still have this, what I call failed reporting metric, but having that and building your business case because it's coming soon. We're seeing it happen really quick.
So, Steve, I would say it only slightly differently, which is I don't think that what we take in from customers can ultimately sway that economic level of intervention very much, because that's the economic level of intervention for us, in that that's what customers are paying us. But at the same time, if we are looking at it, we have to look at it kind of from the standpoint of on behalf of the customers, which would then, that would be an eliminating entry in that, it's still a cost even though they're paying it. And so I think you'd still just kind of wipe that part of it out for the purposes of calculating when you would get involved. Otherwise, you run the risk of the Duke Scott argument.
Yeah.
Of, hey, wait a minute, you guys aren't, you guys don't care because you're getting paid for it.
The point that, you don't care, you're going to sit home and drink I think you said we were drinking Miller Lite.
I think that's exactly
right? Yeah. And no, I get the point. That's kind of what I was asking, because, Apple Canyon and Galena, two systems in Illinois, and the unaccounted for water at Apple Canyon was averaging about 60%. It's pretty high. And Galena was like 45%. So those are pretty high numbers. And the expense we don't recover is pretty immaterial to that. But I agree with you, Lisa, right? These folks, customers, are then paying, an excessive amount of cost that's just being lost at the end of the day. So you have to do some math and say, we got $100,000 of expense total. What can we get that down to versus the capital to replace all the mains or stop all the leaks, right?
Yeah, right. Yeah, what they pay us is irrelevant,
Yeah, that's what I was curious. I don't know I missed it or not.
Steve, I don't
earlier
know
on
if you saw this slide. That's why I went back to it. But this gets to just that. You see on the right side of kind of overspending because you're only fixing the leaks at surface, or when they stop on the opposite side, you're going too fast. You're out there, replacing pipes and doing really excessive leak detection.
Okay.
Yeah, no, I think what Steve's question, no, his question is different. His question is in that total cost line. The total cost, our total cost, it appears artificially low because it's being reimbursed by somebody else. And so we're just saying you got to ignore that part and look at the total cost line, period.
Yeah, so the one thing I would say about that is the rates that you set, that only affects your customer retail unit cost. And so that's on the apparent loss side, but your leakage, it's valued at your variable production cost. So that's power, chemical, et cetera, the electricity to pump that water. So if you're out there reducing leakage, your math against that is the variable production cost. So you wouldn't actually use the rate at which you bill the customers. That's only borne out in the apparent.
No. We're talking about something different. Steve's talking about the allowance. Yeah, absolutely. The variable cost. That's what we're talking about from the absolute dollar amount. What I'm saying is that he gets a piece of that is recovered specifically for water loss, and I'm saying you wouldn't use that you would ignore that in the cost when calculating the economic level of intervention, because even though it's not costing us that amount, it is costing the customer that amount because they're paying it through their production costs plus this other fee they're paying.
Gotcha.
We're in agreement. I was late to the call. I didn't know how that was included or excluded. But yeah, I agree with what you're saying, Lisa.
All right. Other questions or comments, gang?
Maybe one last question. Sorry, I know I'm late. What's the highest level of unaccounted for water that you've seen in the system you looked at, out of curiosity?
Well, I know where the question is coming, and I know where it's going, and that is I get this question asked every day. The answer is we don't track unaccounted for water. The graph that I showed earlier, percent of system input volume versus of how much is lost, we see it all over the board, and it's riddled with very, very challenging data that is supporting that number. So we actually don't track it, and I chair outreach for AWWA, and what we track is the volume of loss by its components and the value. So there's no percent that we ever find is really meaningful whatsoever, and it's all over the board. I mean, we've seen 70-80%, but it means nothing because we haven't really put the lens of how valid is that source information that came in based on the metering example that I had. Versus we see 14 months of supply data, and we see 10 months of bill metered consumption data when we really are able to dig into the sources of the numbers. So it really means nothing. I mean, I hate to be that blunt and brash.
Oh no, we get it. Oh no. We all understand it means nothing. This is pure this is sheer curiosity territory now that we get to we can basically say those kind of
it's all over the board.
Things.
It really is all over the board. Yeah.
Right.
That's why literally are every week out, and you'll see, like I said, some of you will see me next week down there at the NARUC conference. So yeah, we're out telling that story.
Yeah, no, it was pure curiosity, and we're all over the board ourselves, right? I mean, even just within our states, we have some that are really tight, and we have pretty good data, right? We're tracking it on the same time period. Well, we think we have pretty good data, right? And we're as low as at least some of our systems 5%, and some up at 60, almost 70. So yeah, all over the board.
Well, believe it or not, though, there is actually a value for us to having that number, and that value is that we have pretty risk-averse owners, and they believe things when they hear about it, that it happens to somebody else. And so it is actually helpful to say that, yeah, it does seem like it's a whole lot, but here's all the reasons you just talked about. And There's people that have way more than this, and that's still okay. Or it could be okay.
Yeah, that's a good point.
So this is John Hoy. I got a quick question. If I could ask a quick question on the, I know you guys are non-revenue water, but half of our business is wastewater. Do you know if there's a similar tool for inflow, infiltration, I&I on the wastewater side?
Right. There's not that we know of on the wastewater. I am very familiar with inflow and infiltration. Certainly metering by basin is a key element out there, and understanding, and there's metrics of gallons per inch day, per inch mile rather, system. But there's no tool that we're aware of on the sanitary side.
Okay, thanks.
Matt, I'm going to push back to you and see if there's any wrap-up things that you have, or any next steps or thoughts. Or obviously there's the program examples, there's leakage component analysis, there's deeper dives into all of this, but hopefully this gave a little bit of a level for your team today.
Yeah, my final, maybe a question and an observation is, so, you run into a group like us that we've got some experience with this. Maybe we're doing some different things in different ways. And as Lisa observed a few moments ago, we have some owners that are saying, we want to know what your water loss is. And we send them some numbers based upon the way we may calculate it. We might expect them to say, okay, what's that number mean? Or is that number high or low? Or do something about that number and reduce it. In your experience, based upon this conversation, what do you think are 3 things that you think we ought to consider or take away from this conversation, some next steps that we can do to maybe improve upon our activities to reduce non-revenue water?
Yeah, it's a great question. One, I think through all of your managers is to continue to train, as I know you've done in your states, Matt, on these business practices. I think having a few of your systems go through the auditing process, I think, are important pieces. I was asking Drew to maybe pull up the Catawba River Basin, which is a grouping of utilities that. Drew, if you've got that, let me go ahead and have you take the screen. If you could take that real quick, I think that'd be helpful for the team to see. But basically group together, your systems within a particular region and start to show some metrics up there relative to real loss per service connection per day. Maybe looking at it, parent loss, and where you've got some. Because in many cases, like Golden State, when we did massive training in California, they basically had centralized billing, they had centralized service of meter testing and so forth, and a number of things that they were able to offer out. We're seeing wholesalers doing it now. We've got a grouping of utilities that you could start to have some data to feed back. Drew's got it up. Go ahead and scroll down, Drew, to the benchmarks there. So if you look, you can see statistics right there in the middle. Maybe blow that up a little bit, apparent and real. So these are box plots, 18 utilities, where utilities actually can see where they stack up. And you don't see percent unaccounted for, you don't see percent water loss anywhere on this. And what they're looking at is, how are we measuring up in terms of our peers, 40 to 80 gallons per service connection per day, with the mean in the case of these utilities being 60. So Matt, you asked the question. I mean, an ideal situation is, as a company, you're embracing a non-revenue water business portal, something like this, where you've got data you can feed back. You've got your managers who are educated. They're doing audits on an annual basis. You've got centralized ability to do some support for source meter testing, leak detection, all of those things. That'd be more than 3 is where I think you ought to go, my professional opinion.
So we need a plan. We need to be on the same page with terminology and methods, and perhaps as I look at this, this is perhaps a dashboard that could be utilized. Instead of it being Catawba, it could be UI, and Texas and North Carolina and everybody else is included in this, and we have some dashboards that we can report on.
Yep, a lot of as I said, utilities, wholesalers that have retail systems that buy from them. They're doing things just like this. They're educating. They've got this as an ongoing training aspect. We're not going to start to embrace this by just this webcast today. It's going to be, how do we struggle with the data? How do we, get your system managers to be aware of it? How do you pull together the source of data from your systems? And then you'll start to actually embrace it. And that's what happens. Drew, last thing, scroll to the bottom and show the breakout on a component basis. Just right there at the bottom. I think that's helpful, because this really gives you, and maybe blow that up right there, by the economics for both that unreported leakage, 9.3 billion gallons for this grouping of utilities. That's about $3 million on an annual basis. Well, and looking at it on the customer metering and accuracies, 1 billion gallons of loss, again, apparent loss, but that has an $8 million impact. Think of this as UI. As a company, well, you start to understand the nature of your loss. And again, there's no percentage anywhere to be found. It's relative to the volume and the value.
Good thoughts.
Yeah, very nice chart.
Yeah. I think you said it, we can lose a lot of water out of a pipe, but if you have a 8-inch meter that's 50% accurate, you're losing a lot of revenue.
Yep.
Thank you for that, Steve. Good observations. And if there aren't any further questions, I'll go ahead and thank Steve and Drew for their time today. And I think, again, we've recorded this, and I think we can, Steve, if you want to maybe flip it to me, and I can send it around to people. And I guess if anybody has any questions, they can certainly reach out to you. I think your email, Drew, your email's on the invitation, and certainly feel free to reach out to Steve or Drew if you have any questions about non-revenue water and what we should be thinking about next. So with that, if there aren't any final questions, I'll thank everyone for your participation, and have a good Friday evening, or I guess if you're Orrin or Tiffany, have a good lunch. And
that's right.
We'll go from there. So thank you, everyone.
All right.
And thank you.
Thank you, guys. Yep,
Thank
we'll
you.
see you. Bye.
All right. Thank you, everyone.
Thanks for organizing, Matt.
Yeah, thank you. Bye-bye.